Markets look calm, but leadership is shifting under the surface, and that can change how fast the next phase arrives. In our strategy, we track risk through a 5-phase cycle. We do not trade headlines. We sequence signals and position sizes as mechanics evolve. We are reviewing a macro update from Thomas Atkinson. The original video focuses on breadth, sector rotation, and options flow. This breakdown maps those signals into our strategy framework. Small caps are outperforming large caps. That usually signals rotation, not capital leaving. Internals can improve even when the index looks dull. When mega-cap leadership stops doing all the work, managers rotate into sectors to try to beat the index. That is how breadth expands. Strong breadth does not automatically mean low risk. Late-cycle markets can broaden right before sensitivity rises. So our strategy watches what drives the breadth. Options positioning can create reflexive price moves. Dealers hedge, and that hedging becomes buying. That can look like a squeeze. Bitcoin's strength here behaves like liquidity beta. It can rise even when the dollar is firm, if liquidity is not tightening aggressively. Oil matters because it feeds inflation expectations. And inflation expectations influence yields. Yields then pressure equity multiples. Quick disclaimer, educational only. High yields raise the price of time. That caps valuations even if earnings look fine. This is a late-cycle constraint, not a headline. This aligns most with Phase 1 rotation. It does not confirm Phase 2 forced liquidity, but it does raise sensitivity if oil and yields keep climbing. Phase 1 remains the base case. Phase 2 risk is not high yet, but the window compresses if inflation pressure persists. Exit discipline tightens. Internals and yields become the priority signals. Optionality stays valuable. No crash call, no all-in posture, no forced deployment based on 1 week of price action. If this persists, the sensitive tickers are SPY and IWM. Then BTC, SMH, oil, gold, and silver. These are not buys. These are transmission points to monitor. This is not a buy window, but it is no longer distant from late cycle risk. Our strategy stays ready, not reactive. Here's what most people miss. Rotation can hide fragility until it cannot. Hold this thought. Oil and yields often decide the speed of the next phase. Watch whether small caps keep leading. Watch whether oil holds its breakout. Watch whether yields refuse to fall. Which signal breaks first in this cycle? Credit or oil? We do not need to be early. We just cannot afford to be late.